What's up, everybody? Welcome back to Tax Talk Tuesday. I'm here with you again, Arthur Will, CEO of WGG Accounting Tax Services. Let's begin. Okay, guys. So today we're going to go over individual credits. I know last week we talked about business credits, but now we're going to talk about individual credit that you can claim on your 2022 upcoming tax year. Okay guys, so that's what you need to know. There is a child tax credit that's available for individuals that you can claim on the upcoming tax year. Now, the child tax credit program can reduce the federal tax you owe by $1,000 for each qualifying child under the age of 17. Now, important change to the child tax credit will help many families receive advance payments of credit starting in summer 2021. Now, you'll be able to claim the other half when you file your 2021 income tax return. Now, these changes may apply to only the 2021 tax year. Okay guys, so the next credit I want to talk about is the Earned Income Tax Credit. Now, the Earned Income Tax Credit is sometimes known as the EITC. This tax credit is for workers with low to moderate income. Now, the eligibility for this tax credit is based on various factors, including family size, filing status, and your income. Now, when the EITC exceeds the amount of taxes that you owe, it results in a tax refund to those who claim and qualify for the credit. Now, this credit is subject to limitations. Alright guys, so the next one is important. This one is called the Topic number 610 Retirement Savings Contribution Credit. Now, if you make certain contributions to an employee retirement plan or an individual retirement arrangement (IRA), or if you contribute to achieving a better life experience. Now, this is an account of which you are a designated beneficiary and may be able to take the tax credit. Now, the amount of the tax savers credit you can get to show as low as 10% or as high as 50%, and it's generally based on the contribution you make and adjusted gross income. Okay guys, so this is the one I want you to look out for. Now, the repayment of the first time home buyer's credit. Now, this is when you have a condemnation or a threat of condemnation. If the home is destroyed, or if you sell the home through a condemnation or under threat of a condemnation to someone who isn't related to you or who don't acquire a new home within a 2-year period, the repayment with your return for the year in which the 2-year period is limited to a gain of the deposition as determined in Form 5405. Now, the amount of the credit is the excess of the gain that doesn't have to be repaid. Okay guys, so in conclusion, how credits and deductions work is simple. When you claim your federal tax credit and your deductions on your tax return, you can change the amount of tax that you owe. So, the deduction can reduce the amount on your income before you calculate your tax that you owe. Then the credit can reduce the amount of tax you owe or increase your tax refund. And then some credits may give you a refund even if you don't owe any on your tax. Okay guys, so in conclusion, how credits and deductions works is simple. When you claim a federal tax credit and a deduction on your tax return, this can change the amount of tax that you owe. So with a deduction, it can reduce the amount of income that you have before you calculate the tax that you owe. Now with a credit, it can reduce the amount of tax you owe or increase the tax refund. And some credits, you may get a refund even if you don't owe any tax. Okay guys, that wraps things up for today. We went over credits and deductions and some credits and deductions that are available to you now. If you have any more questions about what we discussed today, please reach out to us at wggtax.com. Thank you. See you next week.